Hello everyone, here are the latest market news on June the 7th, 2019. Dollar steady before U.S. jobs data. The dollar was set for its worst week since March as it trod water on Friday ahead U.S. jobs data that is since supporting chances of a U.S. interest rate cut, while the euro held gains made after a less dovish than expected central bank policy review. The U.S. non-farm payrolls data for May, due out later in the global day, is expected to show a drop in hiring. A slowdown in the U.S. labor market was evident in a worse-than-expected ADP National Employment Report released on Wednesday, which showed private U.S. employers added 27,000 jobs in May, the smallest monthly gain in more than 9 years. The dollar has been under pressure in recent weeks by the rising expectation for a U.S. rate cut before a year-end, as an escalating China-U.S. trade rows hurts business confidence and growth. Recent comments from Fed officials have also pointed to an easing in coming months. Oil prices climb further from 5-month lows. Oil prices rose more than 1% on Friday, climbing further away from 5-month lows hit earlier in the week after a report that Washington could postpone trade tariffs on Mexico and amid signs that OPEC and other producers may extend their supply cuts. Brent crude futures were up 85 cents at $62.51 a barrel. WTI crude futures were up 1.4% at $53.30 per barrel. Brent and WTI on Wednesday hit their lowest marks since mid-January after U.S. crude output reached a record high and stockpiles climbed to their highest since July 2017. U.S. oil output rose to a record 12.4 million barrels per day in the week to May the 31st, the Energy Information Administration said on Wednesday, an increase of 1.63 million barrels per day since May 2018. German industry exports fall sharply in April. German industrial exports fell more than expected in April, data showed on Friday, highlighting the vulnerability of Europe's largest economy to headwinds from trade frictions and Brexit uncertainty. Industrial exports dropped by 3.7% in April, the biggest drop since August 2015. The German manufacturing sector has been in recession for much of this year as unresolved trade disputes between the United States, with both China and the European Union, plus uncertainty linked to Britain's expected departure from the European Union, hurt the exports. The economy is also cooling because of weaker growth in the Eurozone and bottlenecks in the automotive sector resulting from stricter emissions standards. Slowdown in manufacturing is starting to hurt the labor market, and there are concerns this weakness could spread to the service sector. German unemployment rose for the first time in nearly 2 years in May. Japan's Nikkei goes up. Japan's Nikkei rose on Friday as reports that Washington is considering a delay in tariffs on Mexican imports eased wider concerns about weakening global trade. The Nikkei share average ended 0.5% higher at 20,884.71. For the week, the index rose 1.4%. Investor sentiment recovered slightly after Mexican and U.S. officials held a second day of talks on trade and migration on Thursday. Amid reports, President Donald Trump might delay the imposition of tariffs that are due on Monday. But trading was thin as most investors stayed on the sidelines ahead of U.S. jobs report that will probably do little to dial back market expectations that the Federal Reserve will cut rates this year. Turnover of the main board was 1.6 trillion yen, the lowest level in nearly 2 weeks.